I'm Jeff Pospisil, the treasurer for the Dakotas Conference of the United Methodist Church, and this is a training video on accountable reimbursements for pastors. This is one of two sessions that I normally lead our new clergy through. The other one is on clergy taxes to help prepare them for ministry. And hopefully this quote helps set the table. It's by David Brennan. It says, "When it comes to privacy and accountability, people always demand the former for themselves and the latter for everyone else." And that's going to really play into the whole issue with accountable reimbursements. So the goals for this session would be, first of all, is that you gain an understanding of what the rules are around accountable reimbursements. And then the second one would be is that you would pick up some practical tips and strategies for how to live with these rules. And there's a so that for this, so that you would avoid being secretly hated by your treasurer. Um, I get quite a few calls from church treasurers, and this is a common one. If I got to complain about a pastor, it's in this area. And the other one is that you avoid eroding trust in your leadership. This ends up becoming a trust issue. That's why they call it accountable reimbursements. And if your church can trust you here, it just builds up the trust in your whole leadership. First, let's look at the legal issues around accountable reimbursements. I like this quote by John D. Harrison: "Intentions do not insulate us from the consequences of our actions." So even though the church and the pastor have goodwill towards each other, there's a lot of things we need to keep in mind. So the IRS, the labor laws, the denomination, and probably even the church itself have set up rules around reimbursements. And we do need to keep these in balance. I'm going to go through a series of questions which will hopefully help us think through these issues. So the first question is, does the accountable reimbursement policy need to be in writing? So does the church need an actual written policy? The answer is no, but it should be. So no, but it should be. And there's several reasons why you'd want a written policy. One is it might protect you in the event of an IRS audit. Another reason, and I think this is a very important one, is that it lays down the rules for everybody. A lot of times there's conflict when we disagree on the rules, and a good policy would spell out, how often are people reimbursed, what type of expenses do you need prior approval of before you incur them and expect reimbursement? Those kinds of things. What expenses are automatically reimbursed? So that's something to keep in mind. If your church doesn't have a policy, I do have templates out there on our website, so I can point you towards those. And just a quick word on unreimbursed employee expenses. Most of us that work for nonprofits or for schools or something like that, sometimes you just eat the cost of an expense. It's something we just happen to do every now and then. So for tax purposes, this isn't deductible for income tax purposes. It used to be, but it's no longer deductible for tax purposes. But for self-employment purposes, it will bring down your self-employment income. So do save those receipts. So if you buy something and you're not expecting reimbursement for it, keep that receipt. It'll bring your self-employment taxes down. The second question is, can the church refuse to reimburse expenses or even limit the amount of expenses they're going to reimburse? And the answer to that is yes. Yes, the church does have that authority. They only need to reimburse what they see as legitimate, documented business expenses, and they can put a cap on it through the budget. So it's important for the pastor to meet with the SPRC as well as the treasurer to figure out what they see as ordinary and necessary business expenses, because that's going to be different from church to church. Some churches might see it as necessary for you to bring members out for a meal every now and then. Other churches might not, so just be clear on this. And if there is something that's in that gray area, I would get prior approval for it. I remember there was this one pastor that bought a dining room table with their accountable reimbursement money. And they justified it in that they did invite people over to their house quite a bit, and they just needed a larger dining room table to help host. Well, that church did not agree that that was an ordinary and necessary business expense. And they have been bitter about that for the last 20 years. So not only did the pastor leave with a black mark, but it gave every other pastor that came in there kind of a strike against them right from the start. The third question is, can the church reimburse mileage at a lower rate than the IRS rate? And the answer to that is no, at least for pastors. For pastors, it's conference policy that when you use your personal vehicle for business miles, you are reimbursed at the IRS rate. And as of 2021, I believe that's 56 cents per mile. For other staff and for volunteers of the church can set their own policy around that. Um, the IRS rate, by the way, it's meant to more than just cover the cost of fuel. It covers your regular maintenance as well as the wear and tear on the vehicle. So it's eventually meant to help cover the replacement of that vehicle. So that's just something to keep in mind. The fourth question is, what mileage is reimbursable? Because there's a difference between commuting miles, which are not reimbursable, and business miles, which are reimbursable. And knowing the difference is important. So here's the general rule, is that if you're going from your home to a regular workplace, that is commuting miles, so it's not reimbursable. So if you're going from your home to an irregular workplace, that is that is reimbursable. That is business miles. And then whenever you're going from workplace to workplace, that is reimbursable as well. So I'm going to go ahead and draw a picture, which will hopefully help understand this. So the parsonage here in this picture, that could also be if you own your own home or you rent a place yourself, but wherever you live. So when you're going from the place you live, your home, to the church, that the church is a regular workplace because you go there, it's your regular workplace. And whenever you go back and forth there, that is commuting, so it's not reimbursable. But what if you have a second church? And even if the church is further away than church A, and when you're going from your home to that second church, that is also commuting miles, so it's not reimbursable. But whenever you travel in between the two churches, that would be reimbursable. You know, a good example of this is we have the Lyman County Parish, which is Presho, Kennebec, and Reliance. And the pastor lives in Presho, but the first service is in Reliance, which is probably about 30 miles away. And so the pastor, if the pastor goes straight from the parsonage to Reliance, that is commuting. And then from Reliance to Kennebec, it's 15 miles, and Kennebec to Presho, it's 15 miles. So the pastor only has business miles for 30 miles, even though they drove 60 that morning. But if the pastor stops at the Presho church to pick up the bulletins and then goes to Reliance and then Kennebec and back to Presho, then the whole 60 miles are reimbursable because they went to a workplace first and then they went to other workplaces. So that's kind of how that works. Now, what about hospital visits? You know, this one depends on what your routine is. So if you normally go there, let's just say every Thursday morning you do hospital visits, then that becomes a regular workplace because you're going there regularly to work. But let's just say you only go when you're requested to go, or just kind of you don't have a fixed schedule for that. Then it would be reimbursable because it's not a regular workplace. And then, of course, whenever you go from the church to the hospital, no matter what, that is reimbursable. What about if you do home visits? You know, you're visiting a guest, or maybe it's a member. That is likely not a regular workplace. I would doubt you go there all the time. So yes, that would be reimbursable. And of course, if you went from the church to do a home visit, that would be reimbursable. And then there are these workshops, training workshops, or maybe it's an offsite meeting somewhere. Those would also be reimbursable. Those are not regular workplaces. So hopefully that helps. So the fifth question is, who owns the stuff that's purchased? So if you purchase an item and are reimbursed by the church for it, do you own it or does the church own it? And the answer is the church owns it. Um, you know, and usually this isn't an issue unless you're being moved to a new appointment, and then it does become an issue. And for most of the stuff that you purchase, the books, the robes, the other supplies, the church is probably more than happy that you bring it to your next appointment. They don't probably want it. But there are items, and usually it's around computer and tech, that they will have an interest in. So laptops, tablets, that kind of stuff. They may want to hold on to that for the next pastor. So if you do want to take your laptop that was reimbursed by the church to your next appointment, you can make an offer to buy it from them because they are the owner. You can make an offer. They don't have to accept, but you can make an offer. And for coming up with a fair price, a lot of times what I've done is I've looked up on eBay to see what the going rate is, or I'll look at the remaining useful life of the laptop or the tablet or whatever. So if you assume that a laptop or a tablet has about 3 years of useful life, and I realize churches often stretch that, but normally that's what I would normally assume. You could then do a calculation. So for example, if I purchase a laptop and after 2 years I find out that I'm moving, if I bought that laptop for $900, I can make an offer, assuming that there's only 1/3 of that useful life remaining. I can make an offer for $300, and that would be probably in the ballpark of what it's going for online as well. So that's an idea. The other thing is, if you don't want to deal with this ownership issue and you just want to own it outright, then you can buy it and just not be reimbursed for it. Um, for some of these items, unless they're used for exclusively for business purposes, you might not be able to write it off for your self-employment purposes, but you could write it off maybe as part of your housing exclusion. So that might not be a bad idea either, to at least lower your tax bill there. So the sixth and final question is, what documentation do you need? And so when it's mileage, you need the date, you need a business purpose, and you don't have to go into a lot of detail, especially when there's privacy concerns. So you could say a pastoral care visit or a hospital visit or a training workshop, whatever it happens to be. Of course, you need the mileage if you're going to be reimbursed for mileage, and especially if it's out of town, the place that you're going. So if you're going to Sioux Falls or Bismarck or whatever it happens to be. When you're purchasing an item, you'll want a receipt. A credit card statement won't suffice. It doesn't have enough details on it. You'll want a receipt because the receipt will tell you the date that it was purchased. If the business purpose isn't readily apparent, so let's say you go to Walmart, you might want to write on the receipt, youth supplies or something like that. Whatever you purchased it for. The amount will be on the receipt, and the receipt will almost always tell you what was actually purchased as well. So now that we have the legal stuff, let's go ahead and get into some practical ideas. I like this quote from Benjamin Franklin: "He that is good for making excuses is seldom good for anything else." And what often gets in our way is that we know the rules, but we just don't have a system to help us consistently follow them. And hopefully this is a help to you. The first tip I have for you is to have a sit-down meeting with your treasurer and your SPRC. And this Calvin and Hobbes cartoon helps illustrate why. Calvin and Hobbes has been out of print for 26 years, so that shows you how old I am. So Calvin asks, "What grade did you get?" And Susie says, "I got an A." "Really, boy, I'd hate to be you. I got a C." Susie says, "Why on earth would you rather get a C than an A?" Calvin: "I find my life is a lot easier the lower I keep everyone's expectations." And really, the purpose of this meeting is for you to align your expectations. So a church will have certain expectations of their pastor, and you may have expectations of the church. So if I'm going into that meeting, if they do have a written accountable reimbursement policy, let's go over that at that meeting. If they don't, then let's go over kind of the things that would be covered there. What do I need to submit to be reimbursed? What are ordinary and necessary expenses that I wouldn't need special approval for, or maybe I need special approval for all of them, whatever that happens to be. What's the timeline for being reimbursed? And again, if they don't have a policy, I would just kind of take notes on this, write it up, and that ends up becoming the backbone behind a future accountable reimbursement policy. the second tip is that you really need to get a system that works for you. And I realize a lot of people are free spirits and they do things willy-nilly, but you need a system that will reliably get those receipts, care for them until they can be submitted. And that's what you really need to do. So when you got a receipt, what I normally do is right away, I write on there the business purpose. So for this one, I wrote on their foundation. And then I have a paper planner that I keep with me all the time. So you probably have something that you keep with you all the time as well. But there's a pocket there. And as soon as as I'm in the checkout, I take that receipt and put it in the pocket. And that's protected until I get to work. So that's how I protect myself. I have another coworker that doesn't have that. Instead, they do things digitally. So they'll write the business purpose on the receipt, and then they will scan it using Dropbox or Google Drive or something like that. Right when they're in checkout, they'll take a scan of that receipt so it goes in a folder so they can deal with that when they get back to the office. So you need a system, and these are two reliable systems that you can do. Most important thing is to deal with that receipt right away, whether you're scanning it or storing it in a pocket. That is the most important thing. So when it comes to mileage, I I don't have a lot of good advice for this, but they do make apps that'll help you track your mileage, which is a good thing. I also do have a template if you want to keep a pen and paper log of your mileage. That's also not a bad thing to do. The third tip is to let your bank help. With how banks do business nowadays and how good online banking is, it's easy to manage multiple bank accounts now. Um, so, for example, here's my family's bank accounts. We have 9 different accounts. And for some of you, it might surprise you knowing that I'm a Dave Ramsey guy, that I have a credit card. But the primary reason I have that credit card is for business expenses that I want reimbursed. And so me and some coworkers, we'll manage our business expenses on a personal credit card because we don't have a church credit card, we don't have a conference credit card. Um, if you wanted to try to justify it, I could say, well, that's so that way I can get the cash back rewards or I can get the improvement to my credit rating, whatever. But anyway, that it's also easier to track. Every purchase that is on that credit card needs to be reimbursed, and I just need to keep the receipts for that. Um, Another way that your bank could help is if you are a pastor that has a lot of mileage. So we're talking around in the neighborhood of 10,000 plus miles. Part of the reason for that IRS mileage rate being higher than your normal expenses is because it's going to help you save for the eventual replacement of your car. And so, honestly, when you submit mileage to be reimbursed, I'd put it in a separate account, a savings account or something like that. And then whenever you have expenses, you take it out of there from there. And then hopefully it'll build up over time to where it'll be help cover the majority of the cost of your car. So that's just a hint, especially for those that a major part of their job is travel. All right. If you do have any questions, feel free to comment or contact me, and I will do my best to help you. All right. God bless you.